Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, June 17th, 2016. This week we'll look at S&P 500, which is attempting to find support at the 50-day moving average. We'll go over the S&P 500 sector ETF, all the 9 sectors. Look at bonds, which are again hitting all-time highs, but they seem to be overextended. Brexit vote is next week on June 23rd. We'll look at some currencies, including the British pound. Gold looks to be at strong resistance. We'll look at oil, natural gas, and finally finish off with corn, which is looking bullish. Right, this is S&P 500 ETF SPY with dividends, so this is a total return index. So last week we hit all-time highs here. All-time highs, 52-week highs are quite bullish development. I think we broke out above this major resistance level here, and now we're basically pulling back, sort of like a throwback, so breakout throwback. Now, I don't know exactly where this throwback will end, especially with Brexit vote next week. So it looks like we're attempting to hold the 50-day moving average, but I think even bigger support is here around 203. Now, some of the commentators compared this pattern here to this pattern, and I think it's quite different actually, because you can see here we're making lower highs. In fact, here we're making higher highs. So these two patterns are different, and the evidence has improved significantly. So market breadth, behavior of stock, indices, various indicators that I look at has improved significantly from this period here. So I'm more confident about this being a true new bull market right now. Down below here we have several indicators. This on balance volume, we're improving in that department. Looks like we're moving higher. Advanced decline line is also moving higher, so that's good. Advanced decline volume line also seems to be breaking out above this level at least. Now this is a intermediate term breadth momentum oscillator. This is kind of like a oscillator of the advanced decline line. So maybe we get a corrective period, something like this. We go to the negative territory and then eventually we bottom out. Now, it does not necessarily mean we're going to be going down significantly. You can just simply trade sideways for a while. Especially next week, I think the traders are more cautious, and we'll see how Brexit vote will work out. This is SPX, the index itself. Here we have my proprietary market breadth index. So according to this system, we had an entry into the bear market back here in September, October of last year. So this entire thing, entire rally here of the October lows, I was short in this, and we rolled this entire leg down. This leg up here, it was quite unprecedented, and most likely due to central bank action. But nevertheless, this is a rally, and we have to respect it. And with the dividends, like I just showed in the previous slide, we hit all-time highs. So here, this index has now entered the new bull market, so I'm more confident about continuation of this bull market higher. It's obviously not going to be a straight line, and this rally was quite unusual, so some corrective action is certainly in order. So we'll see where that goes, but we could potentially just trade sideways and then either break out, or alternatively we could break down and have more corrective action. Here we have several indicators, and this is a divergences here I'm seeing here. So looks like we're making a higher high in the index, but looks like we're making a lower highs in the various underlying indicators. Now, not a I don't normally trade on this, but this is just something to keep in the back of one's mind, one's brain really, is that sometimes they work out, sometimes they don't. Occasionally, markets can rally on not, not a very broad volume, or not very broad participation, but we'll see where it goes. Maybe this is just something like a corrective action, and the indicators will just sort of work off the overbought conditions from up here and then continue higher. But I think the general outlook for the market is bullish right now. So another view of S&P 500. This is a weekly chart going back 3 years. So without the dividends, we did not hit all-time highs, but we're approaching that, that milestone. This week, we did have a small gap here in the beginning of the week. And we did close it intra-week, but this candle is not particularly inspiring, so we could potentially trade sideways, maybe even slightly lower. But there is strong support here at 2025. So I would expect at least a bounce there, maybe even a strong bounce. This will, I think, depend on next week, and what if United Kingdom decides to stay in the Union, and this may be very bullish for the stock market, I think. All right, let's move on to the various sectors. So I have all the 9 sectors in order of what I think is the strongest to the weakest. So first, of course, is utilities. These are all-time highs. Even this week, we hit all-time highs and closed next to all-time highs. Of course, you'll notice that utilities are dependent on interest rates. So, maybe we get a corrective action in bonds and utilities will come under pressure. But generally speaking, utilities are still stocks. And I'll put on a correlation indicator with S&P 500. You will notice that even though here it's a small period, but let's zoom out, let's say 10 years, you'll see that utilities spend most of its time correlating well to the S&P 500, the general market, with occasional foray into the negative territory. So utilities are not a big part of the market. Nevertheless, it is a part of the market. Next, according to strengths, is XLP, which is consumer staples, and this represents about 10% of S&P 500, and we did hit all-time high again just this week. So, pretty strong sector. If we get corrective action, potentially could be interesting entry opportunity. Next is industrials, another offensive sector, all-time highs last week. Industrials is a quite diversified sector. It includes railroads and trucking and all kinds of industrial suppliers. So interesting that there's a lot of strength in the industrial sector also. Technology, now we're getting a little bit weaker, of course, as opposed to the previous sectors that I showed. So we did hit all-time highs in technology in March, and since then we were not able to hit all-time highs. I think this is the reason, is because of Apple. So let me just pull up Apple really quick, and this is a weekly chart of Apple. You can see that Apple has been under severe pressure, but I think we're maybe approaching some kind of a pretty decent support here at around $90 or so. So maybe Apple will bottom out and start moving up again. So the previous sectors, the utilities, the staples, the industrials, and the technology represent almost, let me see, technology is 20%, staples is another 10, industrials. So about 45% of the market seems to be in a very good shape and close to all-time highs. Now we're moving into more laggard territory, so this is consumer discretionary, which represents about 12% of the market, and the all-time highs were hit back in November of last year, and since then we are approaching them, but we're not able to hit them just yet. So this is already kind of, you know, a lagging part of the market. So next sector is materials. Very small sector, it's about 2.5% of the entire S&P 500. So, but nevertheless, this was a strong rally, and we are kind of getting close again to all-time highs. Financials, I think this one is a very important sector. It represents about 16% of the total S&P 500, and you can see that they're well off the all-time highs here. So also, last 3 weeks they were under pressure. Maybe this is some sort of a selling climax, because look, the volume is kind of increasing. So, and also we had a little gap down here. So maybe we'll approaching sort of a selling climax of some sort. Especially if bonds weaken, we can see money move back into the banking sector again. And healthcare, especially biotech, has been under a lot of pressure, but also, you know, strong rally of the February lows, and you know, it's not doing particularly terrible. Maybe if the general market bottoms out, I'm sure healthcare will follow as well. Finally, the weakest sector, of course, is energy. You know, we had multi-year lows here, and again, you know, it rallied with the general market. Now, it may surprise you, but actually, energy correlates quite well with S&P 500. Put a correlation coefficient here, and you can see it spends most of its time in the positive territory. So later on, I'll talk about oil and how oil doesn't necessarily correlate well with the general market. So to summarize, I just wanted to say that I think the evidence has shifted into the bullish camp, and I think that S&P 500 and probably stocks worldwide are going to be most likely going to be moving higher than lower, especially if the Brexit thing will just, you know, be put behind us and we can just get on with our lives. I think the evidence has shifted, and I think in this business we should, you know, shift with the evidence and be flexible and be able to change quickly in our views, not to get stuck only with a bearish perspective or only with a bullish perspective. Alright, moving on to the bond universe. This is TLT on a daily time frame. All-time highs here, including the dividends. This is the total return. All-time high here just yesterday on Thursday. Now, this candlestick here really looks very similar to this candlestick here, and so we had a gap up, an attempt to go higher, and then we sold off. And the next day on Friday we actually followed through lower with a small gap. So this looks like a top-in pattern here to me. So anything is possible, and we could continue higher, but this advance is very steep. So I would not be surprised if we at least came down to the breakout level here and retested this breakout again. So this is a very steep advance, and I think a corrective pattern of some sort may be upon us. Next is TLT on a weekly time frame. And you can see it's a similar picture here, an all-time high, but this looks very similar to a rejection candle. Like you can see this candle right here, also a rejection candle, and we had corrective pattern for like 4 weeks afterwards. So I would not be surprised again if we see some corrective pattern following this week. AGG, this is a more diversified bond fund. We actually had a position open way back here, and we actually still have position open with subscribers, and I still have position open. So it's good to have diversification, and stocks and bonds are obviously a good diversification because they are poorly correlated to one another. So, but this advance has been extremely steep. Again, this is all-time highs with the dividends, and very similar pattern to TLT. It looks like we are a bit overextended. So again, I think we may have a corrective pattern, especially with this enormous gap, which could get filled sometime in the not so distant future. I mean, look at this 50-day moving average. It's a very steep angle, almost 45-degree angle. So I would certainly not be buying up here, but since I already have a position open, I'll be certainly holding it. And here is probably the most concerning chart to me, since I hold AGG. This is a very large. This is a weekly chart, by the way, and also together with dividends. So this is a very large looking, kind of like a cup pattern, which is a depth of 3.4%, and we are really approaching the depth of this pattern on the upside. So maybe we get another spike higher, and then we'll get some sort of a corrective action. But certainly this target is approaching, so this advance is just extremely steep, so I would certainly not be looking to buy or to add any more to my bond holdings. Okay, so this is US dollar in a weekly time frame. So we are here and we're kind of indecisive here, going back and forth. Again, with Brexit vote next week, there is just really a lot of confusion, and new polls are coming in almost daily, and some are saying that they're going to stay in the union, some are saying they're going to leave the union. Japanese yen actually hit 52-week highs again this week, so maybe Bank of Japan will step in and intervene, and that would certainly put pressure on the yen and help the dollar. Anyways, next chart is the actual British pound versus the US dollar as traded on Forex, and this is also a weekly chart. Pretty clear downtrend that started back in 2014. This pattern here, maybe it's kind of like an inverted cup, and the depth is almost 9%, and here we only see so far 5%. So we could see more pressure onto the downside, especially if actually Brexit goes through and they do leave the European Union. But it's really difficult to forecast reactions of traders to the event, so maybe the reaction will be completely opposite, and the pound will actually rally instead. Okay, moving on to the commodities part of the presentation. This is gold on a weekly time frame, and this week looks like we ran into resistance from two peaks now, one from this May peak and the other one is from this February 2015 peak. So looks like the resistance so far is reaffirmed. We'll see where this goes, but this volume pattern also seems to be like we're getting to some sort of a climax of this quite a large rally of November lows. Daily time frame gold, very large rejection candle here, and also on a very large volume. So again, we'll see where this goes, but I certainly would not be buying up here. Anyways, GDX gold breadth, gold miners ETF. Very similar looking, also very large, almost bearish engulfing candle here. So far we didn't have confirmation, but you know, these are 52-week highs and these are all-time lows, basically non-stop advance. Again, as I just showed with bonds, you can see this very steep 50-day moving average, very steep angle here. So some sort of a corrective action is certainly going to be needed to work off these conditions here. Actually, we're seeing already a little bit of divergences here. You can see divergences in breadth indicators. You can see that it's making higher highs while the indicators are making lower highs and lower lows. All right, this is oil, also weekly time frame. Really huge rally of the February lows here that coincided with the low for stocks as well. Really, oil didn't go anywhere this week. This is very unusual looking candles. We had a shooting star doji and then a hammer-like doji, and they just basically stayed in the same place. The price didn't really go anywhere for 2 weeks. So we'll see where this goes. I mean, anything is possible again. Maybe we will continue higher if for some reason the production does not pick up. But I'm already reading articles about how United States producers are already bringing new rigs online and are continuing, drilling more. So it would make perfect sense for drillers to increase production, and that would put downward pressure on the oil prices, of course. So next chart I wanted to show, this is S&P 500 on the weekly time frame, and together with the oil price in black here. So green is S&P 500 and black is oil. And there was a lot of talk about how S&P 500 and oil correlate really well, and how if one moves up, then the other one should move up as well. You can see, even without me putting this correlation coefficient, you can see that there are some period in time when they're moving up together. There are some period in time when they're moving completely opposite direction, and there are some period in time when they're doing something else entirely. So here is a correlation coefficient going back to 1986, and you can see it's all over the place. It's really poorly correlated. Here from about 2009 until about 2014, we had a streak of positive correlation. Now, I don't know exactly why that happened, but this could be just a statistical fluke, and we're basically going to uncorrelate again. And this just shows that I would not be looking at oil as a guide of where S&P 500 will be. This is natural gas, continuous contract on a weekly time frame. So we had a breakout last week, and this week we followed through even higher. So strong move. This looks really good. What most likely will happen now is we're going to get some sort of a rollover and a corrective action to retest this breakout. So a breakout, a throwback, and then a possible continuation higher. So this throwback is important because these are multi-year lows here, and this breakout is the first higher high that we had since just recently. So if natural gas is to be to continue higher, there needs to be a breakout, a throwback, and then a continuation higher. Right now it's looking really good, and I'll be looking to enter on the long side once there is an opportunity. And I wanted to highlight another commodity. This is corn, and also on the weekly time frame. I think we had a breakout several weeks ago here, and then we pushed higher. So we're now approaching this high from last year. So it's entirely possible we run into some resistance and then we get a throwback. So similar to what I just said about natural gas, we have a breakout, and now we need to have a throwback to kind of strengthen our position up in the new uptrend. So far, it's looking very good. And actually, next chart I wanted to show corn itself. You can play this commodity with the same, it's called corn, CORN ETF, and you can use it to play the corn prices. So pretty obvious. Support level is, of course, around here, around what is it, 400. This 50-day moving average is coming in there, and this peak here as well. So we got two peaks here and then a breakout. So a throwback to this level would not be surprising, and actually would be quite healthy. All right, that's it for this week's recap. Thanks for watching, and please stay tuned on how to find us on the internet. Thanks a lot. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now. So please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at, potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the successes in trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members. So that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right, thanks for watching, and please consider signing up for the trade alert services. Bye-bye.